What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner. Happy Friday out there. Hope you guys had a good week. Hope you guys have plans for the weekend. Before we jump out of business for the week, though, let's take a look at what happened with the Bitcoin chart today. Big surge today, big week, uh, turning into a positive month for September. So we're going to take a look at the charts for that. Also, I published my first story ever on Forbes today, so we're going to look at that article. I would appreciate you guys checking that out, sharing it around if you like it. I wrote it to be, kind of targeted at those people that are Bitcoin curious, maybe the boomers that are Bitcoin curious. And so check it out and see if I got things right. If I did, forward it on to those people in your life that maybe you want to get more interested. And then I'm going to open it up and just talk to you guys, chat, questions and comments down below. If you're watching on Twitter, jump over to the YouTube or Rumble. It's just a little bit easier on the interface there on the chat. So, all right, guys, let's share the screen and get into it. Where are we going first? Let's go to the chart first. So Bitcoin, move it over to the bigger side. Get this all shaped up to shape here. Here we are right now, 59,968. We did break 60,000, a high of 60,018 on Bitstamp, right up onto that 50-day moving average, which is very interesting. We were battling with it back here, and we were talking about this for multiple weeks at the time, broke above it, and then sliced back down below, as you can see. And that was just disheartening. This dip right here was very disheartening and really made you earn your Bitcoin. It made you earn your HODL stack because it was very bearish feeling, lots of bearish charts out there. The sentiment was just down in the dumps. And now look what's happened in just a couple weeks. So back again to the 50-day moving average. Can we break it? I think the resistance is going to be less this time, obviously, than back here. Because if you guys remember my theories on support and resistance with the moving averages is it is a Schelling point, so there clumps a lot of orders around the moving averages. Now, as it continually tests that moving average, it breaks down all those orders. It gobbles up all those orders and finally breaks through, okay? This time it's broken through several directions. So going back through it, there's probably going to be fewer orders centered around the 50-day. I could see maybe the 200-day having more orders than the 50-day. But yeah, that's what I'm thinking. It's going to be slightly easier to get through this 50-day. Of course, not a lot of action on the weekend, but we'll see what happens pre-FOMC next week. Of course, the FOMC is coming up next Wednesday. I'll be covering it here on the show live. And okay, so that's Bitcoin. What else should we take a look at? Let's put on a couple more indicators here. So I did write a premium post that just went out on bitcoinandmarkets.com. We took a look at this Ichimoku cloud. This is on the Bitcoin settings, so it's slightly extended due to the trading hours. And you can see we're bumping right up into the cloud, into the Kijun. Kind of getting sucked to the other side right now, on the other side of that cloud. So that would take us over the 50-day moving average and all of that stuff. This chart right here is starting to get a little more bullish. Of course, the cloud is still red, which is one of our check boxes. Price is under cloud, and the TK is offside. So it needs the blue Tenkin needs to be above the Kijun. Lagging span is above the price structure right over here. So overall, we have 1 out of 4 check boxes, but it feels much better because, as we're down here in the dumps, we had everything going negative for the price. Lagging span was falling out. TK was offsides. Cloud was red. Everything was bad. And now, we're starting to check those boxes here again on this. What else can we take a look at? What other indicators? Let's take a look at the MAs. That's some other MAs here. 365. Now, last week when I wrote my premium stuff, we were right here at the bottom. Literally, you can check the charts on last week's issue of the premium content, and it was 52,600. And I said, this is the spot that is the most support in the chart. If we don't stop here, we're going a lot lower. And we stopped right there, bounced up, and are heading back north. So this is the 50-week and the 365-day, which obviously are pretty close to each other. All right. What else on the charts? How about TD sequential? Oh, one thing that I thought was interesting here is on the weekly. You can see that this 9 was pretty much right at the top. That perfectly called the top of this whole entire consolidation. And then if we go out to the monthly, we have a monthly 9. Didn't quite call the exact top, which would have been back here, but it was very close to the top and, corrected 20% or so off of that red candle on a number 9. We are turning around. Again, if you look at this is the monthly candle, and my candles are not green and red. Actually, if we go to this, they'll be green and red. So you can see that this is a green monthly candle right now. So September is, I've talked about some of the Uptober energy spilling over into September due to the halving being a month earlier. And looks like that is going to be what we're getting here. We're only 13 days into September, halfway through September, and we are back green. Can we continue going higher? I think we can, but that is something to watch. If we go out to the quarterly chart, which, Q3 has been negative. We turn green on the quarterly chart here, open with 62,676 on Bitstamp. That is very, very doable. That would be a green month here, or a green quarter, setting up for a very nice green quarter in Q4 with the US election in a halving year. I mean, lots of fundamental drivers to push the price higher. So that is what I'm looking at on the monthly stuff. Let me see if there's any comments and I can get to those. BTCP, happy Friday. Happy Friday back at you. We've had a interesting week here. Wrote my first article for Forbes. Let's jump over to that. So here is Forbes. And you guys can follow me there. I'm just a contributor, but I'm going to be putting out similar content to this. I don't exactly know what my style is going to be for these Forbes pieces, but I'm going to be writing here, probably weekly, and of course at bitcoinandmarkets.com. But let's go through this. So I wrote about 3 concepts investors must know about Bitcoin's 4-year cycles. So hopefully the boomers that are Bitcoin curious can stumble across this and get a little nugget of knowledge, right? So here we go. Bitcoin's 4-year cycle is a crucial concept for investors looking to understand its market dynamics, driven by a unique process called the halving. These cycles create periods of both growth and volatility. So I talk about Bitcoin's supply shock. I go in and talk exactly about what the halving is. This idea of supply and demand equilibrium. So prior to the halving, after the bear market, we kind of bottom out and then we start recovering. And there is a general equilibrium at that time between not just the block reward, but also just available supply out there, which the block reward is part of, right? And that used to be 900 a day. So that was a significant amount of supply that was there to meet demand. And you can think about it like, if you go back to, let's go to the chart. If you go back here, let's go to a weekly. And if you guys remember this era, so from March of 2023 through October of 2023, so that 6-month time period, that's what I would say is a general equilibrium price. And yes, there is some volatility up and down inside of this range, but I would put a general equilibrium, even though there is no such thing as a real equilibrium. Okay, I understand that. But it's a general equilibrium of supply roughly equaling demand for a very flat period. Okay. And we can find these in most other periods as well. So, minus COVID, we could talk about this zone right here, um, even this zone, which happens to be roughly the same level. Go back further, we have obviously this zone at the bottom, but then we have this kind of period. So there are periods of general equilibrium, but then when the halving hits, you can see this is a great example. So we have periods of general equilibrium, the halving hits, and equilibrium is kind of, supply, that basket of supply that we were talking about is thrown off. It shrinks relative to demand, and that's what happens. So anyway, that part of the Forbes piece, oh, you guys didn't even see that. Jesus Christ. Sorry, streamers. I'm not a noob at streaming, but this is okay. What was I pointing out? Jesus. So this one right here. Remember back here in March to October 2023, general equilibrium here. I should have seen that out of the corner of my eye because I have the window pulled up. Then this one back here, general equilibrium, a couple of different places. Okay. And it just so happens that this general equilibrium is interrupted by the halving right here. Right. And then we go up. And if we go back here, we have a couple periods of general equilibrium as well. Back in 2015 into 2016, the halving disrupts it and we take off. So this is kind of the cycle that I'm talking about in this article. Sorry about that. Oh, shit. I just clicked on something else. Okay, so what else? Where do I go from there? The halving event is not tied to a set date. Okay, we talked about that, or you guys know that. Supply shock triggered by the halving has a significant impact on Bitcoin's price behavior. While the halving itself is a well-known event priced in to a degree prior to occurring, the full price effects typically unfold in stages. So this is an efficient markets hypothesis. I'm implying that it's not an efficient market. It only partly is efficient because it can be priced in to a degree, but the full price effects cannot be priced in until afterwards. It is impossible to price in unknown factors like investors' personal reactions to significant price levels. Like, I don't even know what my own personal subjective value is going to be in 6 months, right? Like, let's say I have a health emergency in my family, God forbid, knock on wood. I might have to sell some Bitcoin, right? And so we don't know what our subjective values are going to be to any high degree in the future. We can just kind of estimate. We can kind of guess at what those are. So you can price in, but you can't price in fully. Okay, you don't even know if you're going to get FOMO. Are you going to panic? What price level is going to make you panic? You're probably like, oh man, no, I have strong hands down to $5,000. Okay, do you? Let's see what happens when the price goes to 42,000. Maybe you'll panic sell. You don't know. Same with on the way up. Are you going to, some never Bitcoin person that is a no coiner for life? They might say, I'm never going to buy Bitcoin. And then it hits 100K and they're like, oh crap, this is going to the moon. I better buy in. So you never know what people are going to do in the future. You can't price that in. That's against efficient market hypothesis. Okay, large pools of capital, blah, blah, blah. Anatomy, and then I go through a Bitcoin boom and bust cycle, kind of walk through it. The halving is a one-sided force that almost universally leads to upward price pressure. It is difficult to imagine a scenario where a reduction in supply while demand remains steady or increases is interpreted negatively by the market. I mean, isn't it just crazy to say, we're going to reduce the supply and we're going to increase demand, but somehow can you make a logical argument for why price would go down? I mean, maybe if you're talking about Ethereum, which is not decentralized, it is not fulfilling its promise as world computer or code is law or any of these things, supercomputer, whatever. It's not fulfilling any of those things. And it has too much competition for exactly what it does. So its supply can go down. Demand is not going up, though. Demand is actually going down. Demand goes up for Ethereum. I don't know why I brought up Ethereum, because now I have to talk about it. But I said that when they did minimum viable issuance with EIP 1559 and they started burning fees, I said that was the biggest mistake. That was a bigger mistake than proof of stake, in my opinion. Because one of the things that funded all of the hype and the Ponzi's on top of Ethereum was the base layer Ethereum inflation. That base layer Ethereum inflation was able to be rolled into other projects, other hype projects, other marketing, etc., and pump it up. Okay. And once they started going to ultrasound money, they had nothing to pump up all the scams. So it was obviously going to deflate. Anyway, so getting back to Bitcoin, though, these are the things. This is what I'm talking about. It's hard to imagine a scenario where reducing supply and increasing demand could be negative. So when investors are looking at this, that's what they're going to see. They're going to be, oh my gosh, this is almost like a sure bet. Yeah, it is. It's almost hard to believe that it's that sure of a bet. Existing sources of demand, such as Bitcoin's uses in settlement and accumulation by both retail and institutional investors, remain unaffected. At the same time, the halving logically leads to more demand from marginal sources as investors anticipate future scarcity and speculate on higher prices. As this supply side pressure builds, the early stages of a boom are marked by steady price appreciation, gaining momentum as more market participants take notice. Retail investors, driven by the FOMO, further accelerate the price increases. With each new price high, Bitcoin draws more attention, blah, blah, blah. And now we're going into the bear market. Like all markets, Bitcoin's bull markets eventually reach a peak. In the later stages of the boom, early investors begin to take profit, and the pool of new buyers shrinks as they become fully invested. Now, I had a hard time wording this. The pool of new buyers shrinks as they become fully invested. What I mean is that each cycle kind of attracts a new group of investors. And as those investors get in, say this cycle, they say, I want to get in and have 2% of my portfolio in the Bitcoin ETFs or whatever the case is. Once that pool is at 2%, you run out of buyers. So that's what I was trying to convey in that sentence. Prices can spike rapidly during this phase, driven by speculative mania and short-term exuberance. This euphoria typically culminates in a blow-off top before the market begins to correct. As the top forms, marginal buyers disappear, and those who bought at or near the top often panic sell, accelerating the downturn. The initial drop can be swift and severe as the market adjusts from overvaluation. Okay, historically, Bitcoin's bear markets have retraced each cycle to a higher floor, leading to successively higher lows, showing progressively higher market equilibrium. So we talked about those equilibrium points. And can I make this bigger? Open in a new tab. Let's see if I can share this tab. Okay. So this is just back of the napkin here a little bit, but I charted the price of Bitcoin. The halvings are the red arrows. The bottoms are the successively higher lows. And then the red dashed lines are roughly where this equilibrium would be. There's a higher equilibrium each time after the halving. So equilibrium to here, halving, higher equilibrium. Halving, higher equilibrium. See that? Now we had a halving. There's going to be a higher equilibrium up here. That's what I was trying to convey with that chart. Okay, here's the stages of a Bitcoin cycle. Let me open this in another tab. So very similar to the stages of a market bubble. You've probably seen that chart many, many times. That has the takeoff or a stealth phase, like takeoff phase, or no, stealth phase, accumulation phase, mania phase, and bust phase, or whatever over here. But um, anyway, we have a takeoff, we have a halving early on, if you can see that over here on the left. Then we have corrections. Bitcoin is very famous for the corrections in the bull markets, but this is trending higher with some bear traps. Then we get greed and speculators and a blow off top. Return to normal in a bull trap, market bottom, and then we enter this new equilibrium over here. So in the traditional stages of a bubble, there's like this line that runs here, and this is the mean. And so this is return to the mean instead of new equilibrium. I call it a new equilibrium to match with the rest of my analysis. But yeah, this is kind of the new equilibrium that sets up for the next takeoff, okay? The next halving. And that's what we saw on those charts when we just went through it. Okay, the market eventually seeks a new equilibrium, blah, blah, blah. Importance of time preference. So these are the three things that are important to know about Bitcoin's 4-year cycle. You have it's driven by the halving. You have a boom bust cycle, okay, with higher equilibriums, higher floors. And then the third thing to know is the importance of time preference. So this is a long-term cycle. You're going to have long-term thinking in Bitcoin here. Time preference, okay, you guys know what that is. Investing in a low time preference is especially important in Bitcoin's case, where price movements are inherently cyclical due to the halving events. For this reason, focusing too much on short-term price fluctuations can be misleading and stressful for investors. Instead, a low time preference encourages individuals to focus on the larger picture, Bitcoin's properties and historical trends within a deteriorating macro environment. And I added this in here because that is a hallmark of my analysis, is the overriding environment in which Bitcoin finds itself in is a deteriorating macroeconomic environment. Okay, I talked about dollar cost averaging. Bitcoin is the only asset with a fixed supply, with a strictly fixed supply. And I guess that's not the case because paintings are, but paintings can be replicated. There are fakes out there. So you could have, say, 5 Mona Lisas and whatever. It's not possible with Bitcoin to do that. So this property alone dictates that in the long run, as fiat currencies lose value over time, Bitcoin's value will rise in nominal terms and be more stable than other assets in real terms. Investors with patience, okay, blah, blah, blah. Multi-year time horizon is what you need. All right. So that was my first post for Forbes. If you guys like it, appreciate a page view over there. And also a share. Okay, what is next? What should we talk about next? What do I have on my list here? Q&A. Let me see if there's any Q&A for this Friday. 60,000 broken, says Roel Bose. Okay, let me take a look. 60K was broken. Where are we at now? 6,100. Yeah, so it did go above that 50-day moving average. Just put that back in here if we can find it. There we go. Yep. So we're back above the 50-day moving average. Like I said, it's not going to cause, or not going to have nearly as much resistance as it did back in this region. But you can see we did break it here in this candle. Pretty good. Let me zoom in a little bit. Back here on August 8th, it did break quite a bit above and then close down below. So we'll see where this closes, but there should be less resistance at the 50-day moving average this time. High now is 63.25. Dex Invictus back with us. What's going on? And checking Telegram for any comments. No comments over there on Telegram. All right. Well, check out bitcoinandmarkets.com. That's my homepage for all of my written content other than Forbes. I was writing for Bitcoin Magazine Pro. Went separate ways with those guys when they had their big branding relaunch over there. Was looking for a place to get in with more writing, and Forbes is giving me this great opportunity to write with them. I understand they're crypto. I'm a Bitcoin only guy, but they're giving me this opportunity, and so I appreciate that. I'm hoping that it allows me to build my brand and build my followership here on bitcoinandmarkets.com, and as well do education. I was just talking on Telegram. There's a different vibe here between corporate media, which Forbes, I would say, yeah, is definitely corporate media. They want clicks, they want eyeballs. That is how they make money, right? And I have always been more driving towards quality and driving towards education and community as well. And so that's my big driving factors behind what I aim to do with my content. It doesn't quite match up with Forbes, but hopefully they give me that platform to build the community and do my passion, Bitcoin and markets, and build that out. So, all right, any other comments here? What you guys got on a Friday? Any big plans? I'm going to a high school football game tonight, fellas. Should be fun. I'll wait and see if any comments come up in the next little bit. Take one more look at the chart before we bounce out. Actually, let's take a look around. Take a look around some assets here before we leave. So Ethereum continues to fall against Bitcoin. I mean, this is just the ugliest chart you'll ever see. Gold. Oh, that's the one we were going to take a look at. I forgot. Someone had put that in the Telegram. Okay, so 25.77 right now. The high for the day was 25.86. I'm glad to see this. Okay, I still hold my gold. I'm just glad to see gold bugs getting a bid here. It's not going to be as big as Bitcoin, but it's going to be. It's just good. It provides another more confirming evidence to my overall macro thesis that Bitcoin and gold will both benefit in this time in under deflationary pressure. Okay, I'm looking for the gold chart that I did tweet out. I'm going to share that. When did that come out? One second, guys. Looking for it. I think I put that out yesterday, so it should be easy to find. All right. Yes, here we go. Share this tab. Bring this up. So here is Bitcoin versus gold. Bitcoin in orange, gold in white. You can see back here in 2020, last Bitcoin bull market, gold rose and decoupled from Bitcoin in this era. They both went up, okay? In the election year of 2020, they both went up, but gold went up first, then Bitcoin followed. And now what are we seeing today? Gold going up. This should be another spike higher, and Bitcoin hasn't quite turned around yet, but when it does, it should catch up. Also, I'll note that Bitcoin's scale here is logarithmic and gold's is plain normal. So that means that it went up 40% here when Bitcoin went up 600%. And we will see a very similar outcome here this time as well. I don't know if Bitcoin can go up 600%, but it might be close. It might be close. All right. So that's my stuff about gold. Dex Invictus is just working. Just working on the weekend, huh? That's your plans for the weekend? Well, overtime supposedly now is going to be untaxed. That's what Trump is saying. I did mention some stuff about Trump on my premium content. So back to bitcoinandmarkets.com. Well, I hope you like your job. I love what I do here on Bitcoin and Markets. Doesn't make very much money at all, but I do like what I do. Trying to make a name for myself, trying to make things work. Appreciate your guys' support and all of your likes and shares. If you guys are watching over on Twitter, jump over to YouTube and Rumble. You can make comments better over there. Be part of the show. I want to hear your questions and have a dialogue back and forth. The community on Telegram is awesome. Some days it's slower. Some days there's hundreds of comments, and some days there's just a few. But appreciate the kind of community feeling there. Check that out. T.me/Bitcoin and markets. Okay. Always working on the weekends. They give me lots of hours. Oh, that's good. Very good. All right. What else here? Let's check Telegram one more time, and then we'll bounce out for Friday. That's it. I think I covered all my things I wanted to cover today. So you guys have a great weekend. Get out there, hug someone you love, spend time outdoors, touching grass, and getting back to nature. Know what's really important in life. Bitcoin, as I said in that post on Forbes, it's hard to come up with a scenario where Bitcoin doesn't go up long term. So don't think too hard about it. Don't struggle. Don't be consumed with Bitcoin. Take some time for yourself and your loved ones on the weekends and have good mental health. That is so, so important. But thank you guys for hanging out today. Come back on Monday for the Bitcoin Fundamentals Report. Like, comment, subscribe, and I'll see you guys on the next one. Bye.